Business now, and the Kenya Transmission company, KETRACO, has today inked a deal with Pan-African infrastructure investor Africa50 and the Power Grid Corporation of India to deliver 40.4 billion shillings power transmission project. The deal, coming months after the KETRACO cut ties with Adani Energy, will see two high-voltage power lines built to stabilize electricity supply in western and northern Kenya. Here's Jasmine Wamboi with the details.
Under the agreement, the Kenya Electricity Transmission Company will partner with Africa50 and India's Power Grid Corporation to design, finance, build, operate and maintain two key transmission lines and associated substations. It will be fully financed by the private sector as the government struggles with a tightening fiscal headroom.
To bridge this significant financing gap, KETRACO is deliberately leveraging private sector participation through PPPs to support the development, financing and delivery of transmission line projects.
This PPP model also critically aligns with our drive to accelerate project delivery by shifting capital-intensive transmission investment to private players under strong regulatory oversight.
The first is a 180-kilometer high-voltage line from Lesos to Losuk, which will provide an alternative route to evacuate up to 300 megawatts of wind power from the Lake Turkana wind power plant and support plant geothermal energy in Baringo. The second line is a 72-kilometer, 220-kilovolt connection from Kibos to Kakamega and Musaga. The line will strengthen the medium-voltage network in Kisumu, Vihiga and Kakamega, reducing power fluctuations, cutting technical losses and supporting industrial growth.
The entire western region, ladies and gentlemen, is actually a challenge. Power stability on that side is actually a very heavy challenge. And that is why this project needs to come, not yesterday, but should have come actually earlier than that.
The project is valued at 40.4 billion shillings and will take about 2.5 years to complete from the date of groundbreaking, which is set for December 2026. All costs will be recovered through an availability-based tariff shouldered by consumers and payable only after the construction work is completed and independently inspected. Africa50 and Power Grid India will manage the project for a period of 30 years, after which all assets will be transferred back to KETRACO in good condition.
The project has been critically assessed under the PPP Act and in consultation with all major stakeholders to ensure that it truly serves the best interest of the Kenyan people.
As a renewable penetration increases, the role of transmission becomes even more critical to provide flexibility, manage variability and ensure reliable supply to consumers and industries.
This signing follows the cancellation of the previous multi-billion shilling contract with India's Adani Group. The cancellation, ordered by President William Ruto in November 2024, came after a U.S. indictment of Adani's chairman amid strong public and legal opposition over transparency and due diligence concerns. As the country moves to close the infrastructure funding gap that currently stands at over 4 trillion shillings, the government maintains that the only sustainable and efficient way to do this is by using private sector capital. Jasmine Wamboi, Citizen TV, Nairobi.